Based on the historical data and forecast, Bitcoin shows an overall upward trend, consistently testing and surpassing the 95,000 resistance level. The RSI values fluctuate between 58.2 and 70.0, indicating periods of neither extreme oversold nor overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Given this, I propose a strategy focused on capitalizing on short-term pullbacks within the broader uptrend. We will employ a combination of RSI and Bollinger Band signals. Specifically, when the price dips towards the lower Bollinger Band and the RSI falls below 60, we will enter a long position. The entry price will be $94,900. The stop loss will be set just below the lower Bollinger Band at $94,000, providing a cushion against unexpected downside moves. The initial target price will be $96,300, aligning with the forecast price for May 9, 2025. If the price reaches this target, we will move the stop loss to break even to protect profits. A secondary target will be $97,000, based on the historical top of the Bollinger Bands. This strategy aims to achieve high returns by riding the upward trend while mitigating risk through strategic stop loss placement and profit-taking targets. Based on the historical data and forecast, Ethereum shows a slight upward trend. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, the price has approached the resistance level of $2,080 several times. Considering the forecast for the next week, with prices hovering around $1,820, I recommend a long position strategy. The entry price should be $1,780, with a stop-loss order placed at $1,760, just below the established support level. The initial target price should be $1,840, based on the recent high and the forecast price range. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. Therefore, once the target price of $1,840 is reached, we will move the stop loss to break even to protect profits. If the price falls back towards the center of the Bollinger Bands, around $1,810, we will consider taking partial profits and setting a new target price of $1,830, capitalizing on potential upward momentum. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while mitigating risk. Based on the historical data and forecast, XRP shows a slight downward trend in the recent forecast period, moving from $2.18 to $2.13. The RSI values fluctuate between 48.3 and 60.8, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility, but the price has recently been approaching the upper band, which could indicate a potential pullback. Considering these factors, I propose a short-term contrarian strategy focusing on potential bounces from the support level. My recommended strategy is to initiate a long position at $2.15, anticipating a short-term rebound. Place a stop-loss order at $2.02, just below the established support level, to limit potential losses if the price continues to decline. Set a target price at $2.3, aligning with the recent resistance level and the upper Bollinger Band. This strategy combines the support and resistance levels with the Bollinger Bands and RSI to maximize potential returns while managing risk effectively. This portfolio will be 60% long XRP. Based on the historical data and forecast, BNB shows a downtrend. The price has been fluctuating within a range of $579 to $600, with the forecast indicating a further decline to $567. The RSI consistently stayed below 80, indicating that the asset is not overbought. However, the recent drop in RSI to 42.9 suggests a potential oversold condition. The Bollinger Bands are widening, indicating increased volatility. Considering these factors, I propose a contrarian strategy focusing on short-term opportunities. My recommended strategy is to enter a long position at $586. Given the oversold RSI and the potential for a bounce, this entry point offers a good risk-reward ratio. Place a stop-loss order at $579, right below the support level, to limit potential losses. Set a target price at $600, aligning with the resistance level. This strategy aims to capitalize on a short-term rebound while mitigating risk with a well-defined stop-loss. If the price continues to fall below $579, consider exiting the position and re-evaluating the market trend. Based on the historical data and forecast, Solana shows a slight downward trend with consolidation. The RSI is currently at 53.4, indicating an oversold condition. Considering the support price of $132 and the forecast price hovering around $146 to $143, a conservative strategy is recommended. We will implement a long position when the price touches the support level of $132. The stop-loss will be set at $131 to mitigate potential losses if the price breaks below the support. The target price will be $147, aiming to capture a moderate upward movement based on the forecast. To further refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, supporting the oversold condition. We will enter a long position at $132, set a stop-loss at $131, and target $147. If the price breaks the lower Bollinger Band and continues to decline, we will exit the position to minimize losses. This blended approach combines RSI and Bollinger Bands to capitalize on potential rebounds while managing risk effectively. This portfolio is the most efficient strategy. Based on the historical data and forecast, Dogecoin shows a sideways trend with slight upward momentum. The RSI values fluctuate between 48.4 and 60.8, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the forecast prices, a slight increase is anticipated in the short term. Therefore, I propose a moderately bullish strategy focusing on short-term gains. We will implement a strategy based on the RSI, aiming to capitalize on potential upward movements while mitigating risk. The entry price will be $0.173, triggered when the RSI dips slightly below 50, indicating a potential temporary pullback. The stop-loss will be set at $0.167, just below the lower Bollinger Band and support price, to limit potential losses if the price reverses. The target price will be $0.183, aligning with the recent resistance level and providing a reasonable profit margin. We will use a combination of RSI and Bollinger Bands to predict the price movement. When the RSI is below 50, we will enter the market. When the price touches the lower Bollinger Band, we will exit the market. This strategy offers a balance between potential returns and risk management, suitable for a short-term investment horizon. Based on the historical data and forecast, Cardano shows a slight downward trend. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. The forecast for the next week predicts a continued decline, with prices fluctuating around $0.68, but ultimately settling around $0.658. Considering the support price of $0.659, a conservative strategy would be to look for buying opportunities when the RSI dips below 30, indicating an oversold condition. Therefore, I recommend a long position entry at $0.673 when the RSI falls below 30. Place a stop-loss order at $0.658, just below the forecast price and support level, to limit potential losses. Set a target price at $0.7, aligning with the recent resistance levels and anticipating a potential bounce. This strategy combines RSI and Bollinger Band signals with support and resistance levels to maximize potential returns while minimizing risk. This approach offers a balance between capitalizing on potential upward movements and protecting against further declines. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within the support and resistance levels. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Given this, I recommend a moderate long position strategy with an entry price of $0.248. A stop loss should be set at $0.229, just below the consistent support price, to limit potential losses. The initial target price is $0.251, aligning with the forecast for May 5, 2025, and the upper Bollinger Band. To refine this strategy, we can incorporate RSI signals. If the price dips and RSI falls below 20, consider accumulating more TRON at $0.245. The stop loss remains at $0.229. If the RSI reaches 80, take partial profits at $0.247. The final target price is $0.251, and if the price reaches this level, close the entire position. This blended approach leverages both the price trend and RSI indicators for a balanced and potentially high-return investment. Based on the historical data and forecast, Sui shows an overall upward trend, supported by consistently rising prices and the forecast indicating further gains. The RSI values have fluctuated, but generally remain within a range, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands have been expanding, indicating increasing volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.59, anticipating a continuation of the upward trend. To manage risk, we will set a stop loss at $3.34, just below the recent low, and a target price of $3.68, aligning with the forecast price for May 9, 2025. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at the prevailing price. Conversely, if the price touches the lower Bollinger Band, we will also consider a long entry. In either case, the stop loss will remain at $3.34, and the target price will be adjusted to $3.68. This blended approach combines trend analysis, momentum indicators, and volatility bands to maximize potential returns while mitigating risk, resulting in a high probability, high reward investment opportunity. Based on the historical data and forecast, Chainlink has been trading within a range between $13.2 and $14.1. The recent downward trend in the forecast data, coupled with the RSI falling below 50, suggests a potential short-term bearish outlook. I recommend a short position with an entry price of $14.2. Place a stop-loss order at $14.3 to limit potential losses if the price reverses. A reasonable target price for this short position would be $13.6, aligning with the forecast data's projected price movement. To refine this strategy, I will incorporate the Bollinger Bands. The price is currently near the upper band, indicating potential for a pullback. Combining this with the RSI and the forecast, a short position is justified. If the price touches the lower Bollinger Band, which is around $13.6, it will be a strong confirmation for the short position. Therefore, I will adjust the target price to $13.6. This combined strategy offers a balanced approach, capitalizing on both technical indicators and forecast data for a potentially high-return investment. Based on the historical data and forecast, Pudgy Penguin shows a strong upward trend, consistently challenging and breaking through resistance levels. The RSI has been fluctuating between 47.5 and 83.3, indicating periods of both oversold and overbought conditions. However, the recent upward momentum suggests a prevailing bullish sentiment. The Bollinger Bands have also widened, confirming increased volatility and potential for further price movements. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0109, coinciding with the first day of the forecast period. To manage risk, we will set a stop loss at $0.009, slightly below the support level and the bottom of the Bollinger Bands. The initial target price will be $0.012, aligning with the previous resistance level. To optimize returns, we will implement a dynamic target price strategy. If the price reaches $0.012, we will move the stop loss to the entry price of $0.0109, securing the initial profit. We will then set a new target price at $0.013, based on the potential for further upward movement as indicated by the widening Bollinger Bands and the overall bullish trend. This strategy combines RSI-based entry signals with Bollinger Bands for confirmation and dynamic target adjustments to maximize profit potential while minimizing risk. The portfolio will be 70% long Pudgy penguins, 20% cash, and 10% in other cryptocurrencies. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within the support and resistance levels. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Given this, I recommend a moderate long position strategy with an entry price of $0.248. A stop loss should be set at $0.229, just below the consistent support price, to limit potential losses. The initial target price is $0.251, aligning with the forecast for May 5, 2025, and the upper Bollinger Band. To refine this strategy, we can incorporate RSI signals. If the price dips and RSI falls below 20, consider accumulating more TRON at $0.245. The stop loss remains at $0.229. If the RSI reaches 80, take partial profits at $0.247. The final target price is $0.251, and if the price reaches this level, close the entire position. This blended approach leverages both the price trend and RSI indicators for a balanced and potentially high-return investment. Based on the historical data and forecast, Sun token exhibits a slight upward trend. The price has been fluctuating within a range bounded by a support of $0.0163 and a resistance of $0.018. The RSI values generally hover around the 60 mark, indicating neither overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. The forecast data indicates a continued upward trajectory, with prices expected to reach $0.0183. Therefore, I recommend a moderately bullish strategy focusing on capitalizing on potential upward movements while managing risk. My proposed strategy involves a phased entry approach. First, initiate a long position at $0.0179 when the price touches the upper band. Set a stop-loss order at $0.0163, right at the support level, to limit potential losses. For the initial target price, aim for $0.0183, aligning with the forecast data. If the price reaches $0.0183, consider trailing the stop-loss upwards to protect profits. If the RSI approaches 80, consider taking partial profits and reducing exposure. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Arweave shows an overall upward trend, supported by consistently breaching the resistance level of $8.06 and the forecast prices indicating further increases. The RSI fluctuates around 60, occasionally dipping below 50, but generally avoiding oversold conditions below 30. The Bollinger Bands have widened, suggesting increased volatility and potential for price swings. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands, with a focus on capitalizing on upward momentum. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, indicating a potential buying opportunity. Specifically, let's enter a long position on May 5, 2025, when the forecast price is $7.37 and the RSI is below 50. Set a stop loss at $7.23, aligning with the established support level. The initial target price will be $7.86, corresponding to the forecast price on May 8, 2025. If the price reaches this target, we will reassess the situation. If the upward trend persists, we can move the stop loss to the entry price of $7.37 and extend the target price to $8.06, the previous resistance level. This combined strategy aims to capture significant gains while mitigating risk through strategically placed stop-loss orders, adapting to the dynamic market conditions. Based on the historical data and forecast, Maker exhibits an overall upward trend with periods of consolidation. The RSI consistently remains between 51.7 and 63.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been fluctuating within the bands, with the forecast suggesting a continued upward trajectory. Considering these factors, I propose a strategy focused on capitalizing on short-term upward movements while mitigating risk. We will implement a strategy that combines RSI and Bollinger Bands, aiming for a balance between momentum and volatility. The entry point will be triggered when the price touches the lower Bollinger Band and the RSI is above 50, indicating a potential bounce. For example, on May 5, 2025, the forecast price is $1,530, and the RSI is predicted to be above 50. We will enter a long position at $1,530. The stop loss will be set slightly below the lower Bollinger Band, at $1,510, to protect against unexpected downturns. The initial target price will be set at the upper Bollinger Band, $1,580, aiming to capture the short-term upward momentum. If the price reaches the target, we will consider moving the stop loss to break even and potentially extending the target to $1,610, the upper Bollinger Band on May 4, 2025. This approach combines the momentum signal from the RSI and the volatility indicator from the Bollinger Bands for a high probability, medium risk strategy. Based on the historical data and forecast, DeXe shows a slight downward trend, currently trading near the support level of $13.1. The RSI consistently hovers around the 40 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering the forecast prices, which remain relatively stable around $13.5 to $14.1, a conservative strategy focusing on short-term gains is advisable. Therefore, I recommend a long position entry at $13.5. A stop loss should be placed just below the support level at $12.8 to mitigate potential losses. The initial target price should be set at $14.1, aiming for a modest profit. If the price breaks above $14.1, a trailing stop loss can be implemented to capture further gains. This strategy balances risk and reward, capitalizing on the anticipated sideways movement while protecting against significant downside risk. Based on the historical data and forecast, Kava shows a slightly upward trend with recent consolidation. The RSI values fluctuate between 43.8 and 61.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. Considering the support price of 0.422 and resistance of 0.497, and the forecast price hovering around 0.433, I recommend a moderately bullish strategy. I suggest entering a long position at $0.433, placing a stop-loss order at $0.422, just below the support level to protect against a potential downturn. The initial target price will be $0.468, aligning with the upper Bollinger Band and a reasonable move towards the resistance level. To refine the strategy, I will incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, it signals an oversold condition, and a long entry at $0.422 with a stop loss at $0.41 would be considered. Conversely, if the RSI reaches 80, it signals an overbought condition, prompting a potential short position. However, given the current trend, I will focus on the long strategy. If the price touches the lower Bollinger Band, it could be a buying opportunity. If the price reaches the upper Bollinger Band, I will adjust the target price to $0.497, aiming for the resistance level. This blended strategy, prioritizing the long position with dynamic adjustments based on RSI and Bollinger Bands, should yield high returns while managing risk effectively. Based on the historical data and forecast, Solayer exhibits a strong upward trend. The RSI consistently remains above 60, indicating bullish momentum, and has breached the 80 level multiple times, suggesting overbought conditions that have proven temporary. The forecast prices project continued gains, reaching $3.59. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. Initially, we will enter a long position at $3.22, coinciding with the start of the forecast period. A stop loss will be placed at $3.12, just below the lower Bollinger Band on May 5, 2025, to mitigate potential downside risk. The initial target price will be $3.44, aligning with the forecast high for May 8, 2025. As the price approaches $3.44, we will adjust the stop loss to $3.3, securing some profit while allowing for further upside. If the price continues to rise, we will set a second target price at $3.5, corresponding to the forecast for May 9, 2025. Finally, if the price reaches $3.5, we will move the stop loss to $3.4 and set a final target price of $3.59, the peak of the forecast. This strategy combines trend following with technical indicators to capitalize on the anticipated upward movement of Solayer while managing risk effectively. Based on the historical data and forecast, Quant shows a clear uptrend. The price has consistently been moving upwards, breaking through resistance levels and showing strong momentum. The RSI values have been largely above 50, indicating bullish sentiment, and the forecast predicts continued upward movement. Considering the support price of $87.6 and resistance price of $98.3, I propose a long position strategy. We will enter a long position at $85.3 on May 5, 2025. To manage risk, the stop loss will be set at $83.8, just below the recent low. The initial target price will be $92.2, aligning with the forecast for May 6, 2025. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, reinforcing our entry point. As the price moves towards the upper band, we'll consider a partial profit taking at $93.3 on May 7, 2025. Finally, we'll set a final target price of $97 on May 9, 2025, capitalizing on the anticipated upward trend. This blended approach, combining RSI, Bollinger Bands, and forecast data, aims to maximize returns while effectively managing risk, resulting in a high probability, high reward investment opportunity. Based on the historical data and forecast, Turbo exhibits an overall upward trend. The RSI consistently fluctuates above 50, indicating a bullish momentum, although it occasionally approaches overbought conditions. The forecast for the next week predicts a continued increase in price, reaching $0.0061. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will use a combined approach, prioritizing RSI signals with confirmation from Bollinger Bands and support/resistance levels. Specifically, I suggest entering a long position at $0.00518. The RSI is currently around 67.0, which is not oversold, but the forecast price is rising. The entry price is slightly above the center of the Bollinger Bands, indicating a potential breakout. Set a stop loss at $0.00454, just below the established support level, to limit potential losses. The initial target price should be $0.00572, aligning with the forecast price and the upper Bollinger Band. If the price continues to rise, a secondary target price of $0.0061 can be considered, based on the forecast. This strategy aims to capitalize on the anticipated upward trend while mitigating risk with a well-defined stop loss.